Hello and welcome to our session on central bank digital currencies. Clearly, digital currencies and central bank digital currencies are a very hot topic at the moment. And from the Bank of England, the ECB, People's Bank of China, central banks across the world are considering the future and the role of CBDCs. They've got the potential to provide considerable benefits to treasurers, but what are they? How do they differ from things like Bitcoin, which we've heard a lot about recently, and what exactly might the benefits of CBDCs be? Now, needless to say, I don't necessarily know the answer to all of these questions, but fortunately, I'd like to welcome Shiv Chowla, who is Senior Manager at the Bank of England with responsibility for central bank digital currencies, who will have the answers to, well, many of these questions, hopefully. Just as a reminder, you're all familiar with the platform, so please do ask questions as we go along, and I'll ask Shiv as many as possible after the end, as we get towards the end of the session. So without further ado, let me hand over to Shiv, who's going to give us an overview on the Bank of England's work on CBDCs. Thank you, Shiv.
Hello, everyone, and thank you, Sarah, very much for that kind introduction. As Sarah said, I have responsibility at the Bank of England for our work around central bank digital currencies, or CBDC, which is the topic for my presentation today. Engaging with the private sector and especially corporates is really important to us, so it's a real privilege and pleasure to be here today. There are two sections for my presentation, so I'll rattle through them to allow some time for questions at the end. First, given that CBDC can be a little mysterious to those of us who are less close to it than central bankers, I'll briefly talk about the payments landscape in the UK and explain what exactly CBDC is. Second, I'll talk about our work and progress at the Bank of England, why we think CBDC is worth exploring, what role there might be for both public and private sectors, and just some of the issues that we're researching. So, beginning with the background and context, it's useful to start with a few fairly basic points. It's often easy to think of money as a single thing, which is the same whether it's in your pocket or in your bank account, but there are actually different types of money in the economy, and it's helpful to think of three different characteristics. First, whether the money is physical, like cash, or instead digital, like the money in a bank account. Second, whose liability it is, and specifically, whether it's a claim on your private bank or the Bank of England. Money in a deposit account is a claim on a private commercial bank, whereas cash is a claim on the central bank. And finally, who can access the form of money? Everyone can access banknotes or could open a bank account with the right information, but some forms of money, namely reserve accounts at the Bank of England, are only accessible to financial institutions. So with that in mind, what's been happening to the payments landscape? The short answer is rapid change. This chart won't be a surprise. It shows that cash use has been declining while payments through debit cards electronically have become more frequent. And around 28% of payments were made using cash in 2018, and this is predicted to fall to less than 10% within the next decade. That means more electronic payments, particularly by credit and debit card, and debit cards overtook cash as the dominant payment method in 2017. And if I updated this chart, those trends will have accelerated over the past year since COVID. Looked at another way, the type of money we use for payments is now increasingly a private form of money. Back in the 1960s and 1970s, cash, a liability of the central bank, the Bank of England, made up around 1/3 of the overall money available to make payments. Since then, that share in blue representing banknotes has fallen, and current accounts, claims on your private commercial bank, are increasingly the dominant form of money used for payments. Put another way, there's been a gradual privatization in recent years and decades in the money that's used for payments. So this chart and the one I showed you previously on cash use are major developments and confirm that it's the right time for the Bank of England to be considering the future of money and the type of money that central banks provide to the public. So having taken you on that seeming detour of the UK payments landscape, you're probably wondering where CBDC fits in. And the answer is here in this Venn diagram. Currently, the Bank of England provides two forms of money. Banknotes are universally accessible, which means they can be used by everyone, but they can't be used directly for all forms of transactions. They are resoundingly not electronic. In contrast, reserves are electronic, but are only available to banks and certain financial institutions. And that means if households want to make electronic payments, they must use commercial bank deposits. Payments between commercial bank deposit accounts are ultimately settled in reserves, but this happens at arm's length as commercial banks manage their liquidity positions. And so a retail CBDC, which sits in the middle of this Venn diagram, would be different to all of those. Unlike banknotes, CBDC is an electronic form of money. Unlike bank deposits or other new forms of money like Bitcoin, CBDC would be a public form of money, i.e. something issued by the central bank rather than the private sector. And unlike reserves accounts, it would be universally accessible for retail use to consumers and businesses. So the key message from this diagram is that CBDC is different to the forms of money you're familiar with. So bringing that all together, we define retail CBDC as follows: an electronic form of central bank money issued by the Bank of England, which can be used by businesses and households to store value and make payments. Now, a few important points. £10 of CBDC would be worth the same as a £10 banknote. However, while a CBDC may have other similarities to cash, the extent of these would ultimately depend on its final design. CBDC would not be a cryptocurrency. Its value would not fluctuate like Bitcoin. Its value would be stable. But there might be some useful technological innovations like the so-called distributed ledger technology, DLT, that we can adopt. And the last thing I should really emphasize is that this absolutely isn't a replacement for cash. We're committed to retaining access to cash and supplying it for as long as the public want to use it. And that won't change if we decided to go ahead with the CBDC. But it's not only the Bank of England exploring this idea of CBDC. Interest in central banks internationally is increasing and has really accelerated over the past 2 or so years. And 86% of central banks are now engaging in some form of CBDC work. Some of that is on a CBDC for wholesale use, but a large part, including the Bank of England's work, is focused on a retail CBDC. Now, this work has generally involved internal research, external reports and speeches, and some technological experimentation. The big picture, though, is that central banks, including the Bank of England, are still working out whether to go ahead with CBDC, and if so, what design it would take. But I should give a notable mention here to 2 countries. First, China, where there's a live pilot running, and second, the Bahamas, where a CBDC was actually launched last year called the Sand Dollar. So having spent some time telling you what CBDC is, now let me talk a little about what the Bank of England is actually doing. We released a discussion paper in early 2020, about a year ago, and this set out some of the design questions around CBDC. But as I just said, we haven't yet come to a decision on whether or not we'll go ahead with this. That's something we're thinking hard about, but it goes without saying that a CBDC would need to support the Bank of England's objectives around monetary and financial stability, and an innovation like this would need to convincingly pass a very thorough cost-benefit assessment. We had a really rich set of responses to that discussion paper, with responses from banks, fintechs, corporates, technology companies, and academics across a wide variety of sectors. And without going into the details, there was broad support for the bank at least continuing to explore CBDC. So when coming to a decision on whether CBDC is worthwhile, the first thing many of you would rightfully ask is, what's the benefit? Well, this diagram speaks to that. A CBDC could provide a variety of opportunities. by supporting a more resilient payments landscape through the introduction of a new payment rail. It may also provide safer and more trustworthy payment services and consumer protection than new forms of privately issued money-like instruments. A CBDC could also support households and businesses in making fast, efficient, and reliable payments, benefiting from a new, innovative, competitive, and inclusive payment system. And in this way, a CBDC could also help to meet future payments needs in the digital economy by harnessing the potential of these new features in money. These include concepts like programmable money, which enable greater functionality and automation in payments. Example of this might be the automatic routing of tax payments to tax authorities at the point of sale. A CBDC would also improve the access and availability of central bank money, which is the anchoring asset of the financial system and risk-free. And this may be especially important in the future as cash use declines. Cash has some special features in terms of privacy and ease of use. So reduced cash use may leave some underbanked groups of society at risk if private sector payments aren't available to them. And CBDC could perhaps fill that void. Lastly, it may also provide a building block for better cross-border payments in the future, as these are currently slow and costly. I've been talking about a central bank digital currency and explained that from a financial or balance sheet perspective, it's a liability of the public sector, which is a central bank. But that's a separate issue from the practical or technological question of who operates such a thing. And there are a number of ways we could allocate the division of labor between the private and public sector on this. These decisions will have impacts on whether CBDC as a whole is resilient, open to competition, interoperable, and designed around the comparative advantages of the private and public sectors. In our exploration, we have ruled out a model where the Bank of England would exclusively provide all CBDC-related services and where we engage directly with the end user. While that approach may provide a reliable, resilient, and secure system, it wouldn't meet some of our other desired design principles, including openness to competition and being supportive of innovation. It would probably not also play to the comparative strength of the Bank of England as a public institution. Providing innovative and competitive user-facing services is a relative strength of the private sector, who have ongoing experience in delivering a service for the general public, and we would therefore see a significant role for them in delivering CBDC. On the other hand, we wouldn't favour an entirely private solution for similar reasons around each sector's comparative strengths. We therefore favour a middle approach, making best use of the skills of both the public and private sectors. We set out this illustrative platform model in the paper as a starting point for discussions. The central bank will provide the core technology that processes CBDC payments, the core ledger, and would define standards and regulatory requirements about who can access that platform. The private sector payment firms, we call them payment interface providers, would provide the technological interface between the Bank of England and end users. These private sector entities would also onboard users and ensure necessary compliance, like know your customer checks. This means that the customer service and innovation in payment services will be provided by the private sector, and that approach would allow both the public and private sector to play to their respective strengths. So I've told you why CBDC could have opportunities, and I've also told you about how it would involve both public and private sectors. So you might be asking, what's the catch? What are the challenges or risks? Well, the Bank of England's responsibilities are ultimately grounded in preserving monetary and financial stability, i.e. keeping inflation at target, growth steady, and avoiding financial stress. So at the very least, CBDC would have to do no harm to our ability to meet those objectives and still improve payments in the UK. Well, there are potentially significant implications for the banking sector that we need to be mindful of. CBDC would involve an outflow of deposits from commercial banks to the Bank of England's balance sheet, And if banks have to compete harder to get deposit funding in a world with CBDC, deposit rates may have to increase. And if banks have to search for more expensive wholesale sources of funding to fill that gap, funding costs may go up further still. And if banks decide to pass on that higher cost of funding by increasing the price of their loans, that would be more expensive credit for households and businesses and tighter credit conditions in the economy. And despite all the capital and liquidity regulation we have in place, there could also be a risk that if a bank were ever in trouble during a period of financial stress, that deposits could flow out more quickly if people could transfer to a CBDC account more easily than if they were withdrawing cash. So these are all issues we're actively exploring now to better understand their likelihood and implications. There are some possible upsides too. CBDC could influence deposit rates in the wider economy more directly than is currently the case, making monetary policy more effective. And you could also argue that banks would be safer if they're less reliant on flighty deposit funding. My presentation so far has hopefully told you a little about what CBDC is and why it might matter, and why there are both opportunities and risks. But to emphasize, we're still some way from making our mind up about this, and the number of issues to explore remains very large. We can divide them up into 3 broad groups, and here's just a flavor of them. On economic design, should CBDC pay interest to the money holder in contrast to cash? And if so, how much? Who precisely should be able to access it? All companies, or just non-financial corporates, or only businesses up to a certain size? And should there be limits on the amount of CBDC you can transfer or hold in a given amount of time? And all of those economic design questions will affect how much demand for CBDC there might be, and therefore what happens to the wider financial system. On functional design, how best can we manage offline payments? How can we maximize financial inclusion and ensure access? How should we ensure users can maximize their privacy despite all transactions being electronic? All of those functional design questions are about ensuring an effective user experience so that CBDC meets their needs. And on technology, what's the right architecture for the infrastructure and ecosystem? And what form should CBDC take as a money instrument? Should it be an account or a token type bearer instrument? And what role should there be for digital ID? I will stop there. I hope you found that useful. And again, it's a real pleasure to be with you today. So I'll hand back to Sarah, and very happy to answer any questions that you might have for me.
Great, many thanks, Shiv. And yes, there are questions. You'll be pleased, surprised, disappointed to hear. Thank you for that, very informative. Can I just start with a very probably simple but possibly difficult question? So can you give an example of what a CBDC might be used for? So do you anticipate it being used, if somebody has a utility bill to pay, for example, is that what they would use it for? Or
exactly, I mean, this could be used for retail payments. So this is really about your day-to-day payments. So if you're a consumer paying your bills, if you go to a shop buying a good or service, possibly if you're a business accepting that payment, if you're a business and you have an employee paying them in CBDC, this is all very much about retail payments. What we're not talking about here is wholesale payments. So if what you had in mind was possibly wholesale settlement or transactions between very large corporates, running at the heart of the financial system, that's about wholesale settlement. That's not what we're talking about here. We're talking about retail, Sarah.
Okay, that's really helpful. So, and actually that leads to another question that we've been asked, which is, so will a consumer hold a CBDC in a form of an e-wallet with the Bank of England?
That's a really, really great question.
Assuming, obviously.
Yes, of course. So that's a good way of thinking about it. So as I explained, there is a role for the private sector here, and they would act as the intermediaries between the Bank of England and the end user. So think of it as the private sector being the entity that provides that wallet. But putting that kind of detail to one side, yes, exactly. You will have a wallet, an e-wallet, and that is where you would be able to hold, transact, access, and use your CBDC. it would remain a liability of the Bank of England. This is a liability of the central bank. It's a public form of money. It's just that you're using a private sector interface to interact with it.
Okay. So the private sector is more likely to hold the wallet with the Bank of England, and me as the consumer, I'd have my account with the private bank.
So you have in effect, you have your account with the Bank of England. It's just that the private sector is the technological interface between the two of us.
Okay, understood.
Exactly.
Thank you very much. I'd like to make it clear in my little head. So there's clearly quite a lot of chat going on about this. A lot of thought is being, put into it. Sounds like the Bahamas are slightly ahead of the curve, which is an interesting idea. And I think we ought to ought to have our next conference there when we're all allowed to meet for real and just check if it's really working. But have you got any idea of timescales for this? Is this something that because treasurers like to have a bit of a to-do list and a this week, next year type approach? Any sort of suggestions as to where on the radar it needs to be? Is this a challenge for this year? Do they need to have an e-wallet by the end of the year, for example?
No, that's a great question, and the answer isn't this year. If that helps provide some reassurance. So, I mean, I mentioned earlier that China are already running real-life pilots, but that's a pretty unique case. So it's worth looking at central banks more generally. I mean, central banks in the G7 are currently in the analysis and decision-making phase. And it goes without saying that this is a big thing to decide and will therefore take some time. And each central bank will have to think through it on their own timetable and vis-a-vis their own needs. And there's no presumption here that the answer to CBDC will be affirmative. But there is a flurry of exploration by central banks. And if that exploration carried on at its current pace, you might expect countries to start making decisions on CBDC, even if only tentative ones, within the next few years. And let's assume they think that CBDC is the right thing to do. You then have a process of starting to build them. And that means kind of technological exploration. It means building, testing, piloting, all before it went live. And that process will again take several years and vary depending on how many resources are thrown at it and how adept the technology experts are at finding solutions to the requirements that central banks seek. So with a very large pinch of salt, you could see CBDCs being live in the latter part of this decade, but that will vary a lot on a case-by-case basis. For some countries, it might be sooner, for some countries later, and for some countries, they might not want CBDC at all, Sarah.
Okay, and actually that raises touches on another question that's been raised around coordination and possible lack of coordination across central banks. The degree to which, a lot of the larger corporates certainly have been slightly burned, referring to LIBOR, which I'll talk about later. Different banks taking different approaches can give end users a lot of challenges, shall we say? So I was wondering if there's any degree of international coordination. Is this the sort of thing that's being talked about at the G20? How does it link into the whole ISO 20022 approach?
That's a really, really fair question, Sarah. I mean, ultimately, the decision over CBDC and its design will be for domestic authorities to take in relation to their own economies. But hopefully I can provide some reassurance that central banks are coordinating internationally on this. We at the Bank of England engage closely with our partner central banks across the G7. And actually just over a year ago, we formed a coalition with the Bank for International Settlements, the European Central Bank, the Federal Reserve, as well as the central banks of Switzerland, Japan, Canada, and Sweden to explore CBDC together. So we're absolutely mindful of the need for central banks to agree common principles, common frameworks, and common features of CBDC, and at a high level to agree some sort of international consensus more broadly as a way to help the private sector. So that group is working together, it's working well, and they have a variety of projects, and we're looking forward to kind of continuing that collaboration. And on top of that, you of course have multilateral coordination by the likes of the G20, G7, and international organizations like the IMF, all of whom can help to ensure some level of coherence in the approach taken by central banks. So yes, it's about domestic decisions, but it's absolutely the case that central banks are talking to each other very closely to agree some level of commonality here.
That's somebody who's been burned. That's really good to hear. Very positive. And another question, and I know exactly where this is coming from. So I'll just read it. They say that some digital currencies require large and increasing energy consumption, including data mining. Will the Bank of England be considering its environmental impact? And I guess actually maybe this is a slightly broader question now, which is, how green are CBDCs, or are they? This is clearly a Bitcoin related question. Are they as dirty, inverted commas, as Bitcoin?
Sure. No, and again, a very, very good question. I mean, I think that the question, as you said, probably relates to Bitcoin. Bitcoin, as you know, has been in the news a lot recently for obvious reasons. And, at the heart of the kind of cryptography or process by which Bitcoin is mined, so to speak, there is a very energy intensive process there. And that's why this debate or question is a very fair one to have. You need not use that same type of technology for a CBDC. It's not the case that all digital currencies need to be that as energy intensive as, say, Bitcoin is, for example. So there's absolutely no need or presumption here that a CBDC would have anywhere near the type of environmental impact that's associated with some other digital currencies. I mentioned before that for us to make a decision on CBDC would require rigorous cost-benefit analysis. And I think within that would be a consideration of the cost of actually delivering such a thing. And within that, in turn, would be a consideration for the environment. So were we to go down this route, we would, of course, have to think about the costs of CBDC in a wide sense, but it needn't be, and I would have no presumption or concern that it would have the kind of environmental costs associated with some other digital currencies.
I think that's really helpful to understand, actually, because clearly there's a lot of chat around that at the moment, and the whole ESG road to COP26 this year. It's increasingly a focus of corporate minds as to just how green the products that they are using actually are, and that will include currency. Looking at the clock, one last question, probably. How does CBDC benefit the consumer as opposed to them paying with Apple Pay? You don't have to answer on Apple Pay specifically. We'll use that as a generic term, if that's okay.
Sure.
We're not picking holes in Apple.
No, of course. That's, again, a really, really good question. I think from a user perspective, these very different forms of money may seem in some ways quite similar to each other. From a user experience, they may not seem all that different to each other. But the basic principle that you're using some sort of device, you're engaging with this electronic form of money, and you have some very rich payments functionality, I think is fairly commonplace. I mentioned earlier that CBDC would give you the option of having some quite advanced functionality. There's this idea of kind of smart contracts or programmable money. And so you could set conditions on your bank account, which says that, if a bill comes in with a certain condition on it or with a certain fee attached to it, transfer money from this account to that account, pay at this time or that time. Or, it's not inconceivable that money could come in from another, if the government were engaged in this, you could receive some sort of money where there would be a condition attached that money only sits in your bank account for a certain period of time before it goes away. So essentially what I'm trying to say here is that CBDC gives you all sorts of potential opportunities for functionality which aren't really available right now with existing forms of money. So that would be one important reason. The second is that, as I said, there are issues with cross-border payments right now because they're not very effective or quick or cheap. That being the case, if you had CBDCs in multiple countries and you found an appropriate way to link them up, there is a possibility there of having far more effective, faster, more transparent, cheaper cross-border payments as well. So I think there are opportunities there that a CBDC would give you relative to current forms of money, which were described in the question.
Oh, that's brilliant. And actually that brings us neatly to the end of the session. So Shiv, I'd like to say thank you very much indeed, both for the presentation and answering the number of questions that we've received. So thank you for that. Just to let everybody know, thank you as well to the audience for submitting questions. That always makes things much more interesting for both of us anyway. You can, of course, watch this session again on demand. It'll be up on the platform towards the end of the day. And please do continue the discussion and chat directly with fellow attendees within the networking lobby. Thank you again, Shiv, and thank you. Good afternoon.
Thank you.